Hey there, future investors. Welcome to Investopower, where we break down complex finance and investment concepts into easy-to-understand content. If you're new to the world of investing, or maybe you've heard the term stock market but aren't exactly sure what it is, don't worry, we've got you covered. Today, we're rediving into one of the most fundamental and exciting parts of the financial world, the stock market. So, what exactly is it? Let's break it down. At its core, the stock market is like a giant marketplace. But instead of people buying and selling fruits or clothes, they're buying and selling pieces of companies. These pieces are called stocks or shares. When you buy a stock, you're buying a small part of that company. It's like owning a tiny slice of a big business. Now, why do people buy stocks? Well, when you own a stock, you're hoping that the company will grow and become more valuable over time, which can make your stock more valuable as well. Think of it like this. If you bought stock in a coffee shop and it became the next Starbucks, your small piece of that company could increase in value. People buy and sell stocks to try and make a profit. You can buy stocks at a low price and sell them when the price is higher. That is how you potentially make money. But it's not always that simple. Just like any marketplace, the stock market can be a bit unpredictable. Stock prices can go up and down depending on supply and demand. If lots of people want to buy shares of a company, the price goes up. If fewer people are interested, the price might go down. But where exactly do these stock transactions happen? Well, the stock market isn't just one big place. It is made up of different stock exchanges. Two of the most famous ones are the New York Stock Exchange and the Nasdaq. Think of these exchanges as giant online marketplaces where buyers and sellers come together to trade stocks. And who are the people buying and selling? Well, it's not just everyday people like you and me. You also have institutional investors, like hedge funds, mutual funds, and even governments. They all participate in the stock market to try and grow their own wealth. Now, if you're wondering how stock prices are determined, it's all about supply and demand. Again, if a company is doing well and people think it will continue to succeed, more people will want to buy its stock. The price goes up. But if something goes wrong or investors lose confidence, the price can go down. So, the stock market is all about buying, selling, and trading ownership of companies. But here's the catch. It can be risky. The market goes up, the market goes down, and no one can predict exactly what will happen next. That's why it's so important to do your research, understand what you're investing in, and never invest money you can't afford to lose. Alright, let's quickly recap what we learned today. The stock market is a place where people buy and sell shares of companies. When you buy a stock, you own a small piece of a company. Stock prices can rise and fall depending on how much people are willing to pay for them. The stock market happens on exchanges like the NYSE and Nasdaq. It's a great way to potentially make money, but it comes with risks too. That's the stock market in a nutshell. If you found this video helpful, hit that like button, subscribe, and ring the bell so you never miss a video. If you have any questions about stocks or anything, drop them in the comments below. I'd love to help you out. Until next time, keep learning, keep investing, and remember, financial freedom starts with knowledge. Thanks for watching. Stay tuned for more videos to help you grow your wealth.